Hey guys, the way we're investing is starting to change, and for a growing number of people, investing is no longer just about the financial returns. More and more millennials and Gen Zs also want their money to have some form of positive impact on our societies and in the world at large. We've recently been exploring ethical investing and doing some research into this area. And what I've found when I've looked into this area is that it's not the easiest thing to do to find the right type of ethical investments. Where you might look at your existing broker's website, they might have a few ethical type funds, but at best, you might not have the right filters to be able to drill down and see if those investments really suit your needs or not. Today, I want to share with you what we've learned so far on how to research and start investing your money ethically. I'll be sharing my screen and giving you a step-by-step guide for what we're doing to take these steps to expose some of our money towards ethical investments. The goal for today's video is essentially to begin to educate us on this area of ethical investing. And if it's something that you might be interested in, then I hope will help you take some step forward towards making this area of ethical investing a reality in your life potentially. So today's video has three main parts. The first part is I'll be walking you through how best to start investing ethically. Next, I'm going to be giving you a 6-step guide for what you need to do next in order to begin actually investing your money ethically. And finally, I'm going to give you a super practical demo. I'm going to walk you through how I find the right ethical ETFs to invest my money into. If you're really enjoying today's video, I'd really appreciate it if you hit that like button to support our work here at The Humble Penny. Don't forget to hit the subscribe button as well for more investing videos just like this one. All right, let's dive straight in. So what on earth is ethical investing? You might have heard acronyms such as ESG and SRI. According to Investopedia, ESG looks at a company's environmental, social, and governance practices alongside more traditional financial measures. Here up on the screen, I'm going to share with you guys the list of common ESG factors that are usually considered in these types of investments. Investments with good ESG scores have the potential to actually drive returns, whereas investments with poor ESG scores may actually reduce returns. So you can see up there on the screen a split between environmental, social, and governance factors. On the environmental side, you have things such as energy consumption, pollution, climate change, and things like that. On the social side, you've got things such as human rights, child and forced labor, employee relations, and things like that. And finally, on the governance side, you've got things such as the quality of management, board independence, and things such as shareholder rights, for example. Now, SRI, which stands for Socially Responsible Investing, on the other hand, again, is defined by Investopedia as going one step further than ESG by actively eliminating or selecting investments according to some specific ethical guidelines. It says here that SRI uses ESG factors, so those factors I mentioned previously, to apply negative or positive screens on the investment universe. For example, as investors, we may choose to avoid investments or ETFs that invest in companies that are engaged in things such as firearms dealing or those that hold anti-conflict beliefs. Other examples of negative screens that socially responsible investments try to screen for include alcohol and tobacco, gambling, terrorism, environmental damage, and human rights violations. For those engaged in socially responsible investing, making a profit from their investments is still important, but the key is that it has to be balanced with their principles. The goal essentially is to generate returns without going against one's social conscience in that process. Now we've got those definitions behind us, how big exactly is ethical investing? Now, ethical investing is quite small relatively to the traditional form of investing, but it's growing quite rapidly. According to the website Morningstar, funds that invest according to ESG principles attracted around $71.1 billion between April and June 2020, bringing the total invested in ESG as a total at over $1 trillion in total, which is a record as at 2020. Now, what are the different ways that you can start investing your money ethically. The first is that you can go about picking stocks and building yourself a portfolio. There's nothing wrong with doing that, but the big problem with doing that is that it's very time consuming. It could become pretty expensive and you could end up with a portfolio that's not sufficiently diversified. Now, the second way you can go about investing is to invest in funds, and quite a lot of these are actively managed funds. Here, active managers take steps to try and screen out investments that they might consider to be unethical. Now, as good as this sounds, and as we've said so many times on this channel, active investing can be very expensive. So the third way that we'd recommend that you go about trying to invest ethically is to do it by investing in ethical ETFs. By that I mean ethical exchange traded funds. This is a much cheaper way to actually get started with ethical investing, and you still get to achieve the same outcome, which is that you invest in funds that screen out some negative factors such as firearms manufacturers, gambling companies and things like that. All right, so let's now look at the second part of this video for the 6 steps you should take to start investing ethically. The step 1 is to be clear on your values. What exactly is most important to you? Do you care about the environment, or do you care more about social issues, for example? Do you want all your investments to be ethically aligned, or do you want some of your investments to be ethically aligned? Getting that clarity is the important first step on this journey. Step 2 is to find out where your money is currently invested in. Do you have your money in your stocks and shares ISA, or do you have it in your pensions, for example? And to what extent is your money currently invested ethically? If your money is not invested ethically at all, which is quite normal, how easy is it for you to make a change to your existing investments? Step 3 is to do your research about ethical funds that you can invest in. Now, you can invest in ready-made portfolios that already exist right now. For example, using the app called Ticker, you can explore investing in some ready-made portfolios. You can also invest via the likes of Wealthify, which I'll put up on the screen, as well as via the likes of PensionBee, who also have some ethical investment options. Now, I mention all these companies, which are by no means recommendations, but just examples for you to get some ideas to say that there are some ready-made portfolios out there. And you have to be comfortable that these companies are already making the decisions for you when it comes to putting together these portfolios. If, however, you want to be completely in control, you want to choose what exactly you want to invest in, i.e., you want to choose what funds you want to invest in specifically, then make sure you hang around for the rest of this video, because I'm going to be guiding you step by step for how you can look at the universe of funds out there and choose the right ones to potentially invest your money into. Step 4 is to know which accounts you can invest your money into. You can invest your money tax efficiently and ethically via your stocks and shares ISA, or you can invest ethically and long-term by investing in your pension or your self-invested personal pension, your SIP. Now, step 5 is to create your plan and stick to it. You want to think about things such as your time horizon for investing your money. What are your goals specifically around investing ethically? For example, are you investing for retirement? Number 3, what returns would you be happy with from investing ethically? And finally, how would you feel if you invested ethically, but those investments did not perform, i.e. they actually led to you potentially losing money? These are challenging questions to ask yourself, but they're very important questions to consider on this journey towards starting your ethical investing. Now, once you're clear on all these questions, you should implement that plan and start investing your money. Step 6 is to monitor your portfolio regularly. Now, if you've chosen your own investments, then a suggestion is to try and monitor those investments on a quarterly basis. But if you've chosen one of the ready-made portfolios I mentioned earlier, then a suggestion is to try and monitor your portfolio on an annual basis. All right, let me now give you a demo, as I mentioned in step 3, for how you can go about researching and beginning this journey of investing your money ethically. Okay, so one website I would suggest to use to do this is Just ETFs. It's not a recommendation, but one that I would use myself. They've got this ETF screener, which is pretty useful. So you come and click on that. And notice they've got here a universe of 1,351 ETFs that come up. So we need to filter this down to the right strategy around socially responsible investing. So first thing to do is click here to filter by equity, as you can see here at the top. Next, we want to try and filter by an equity strategy, in this case, SRI, social/environmental. Notice how that drops our result to 146 straight away. Next, we want to pick a region. I love to focus on world as an area. So you can see as a region, so you can see again, that's filtered down. And then finally, we want to try and filter by size, okay, to just eliminate all those smaller funds which might not be very efficient, okay? So click here to be larger than £100 million. You can see that already drops us down to 33 funds for us to focus on. So we've got equity, world, social/environmental, and more than £100 million as our filters. Now you can do things such as filtering by the total expense ratio, because that then tells you what funds are pretty cheap to look at. But I wanted to just take a quick look at the sort of options we've got here. We've got iShares here as a provider. Here's a global sustainability fund. You've got funds for the digital economy. You've got some funds looking at research, disruptive technologies, future mobility, stuff like that. So if you're interested in things such as climate change, and those sorts of things, then you want to try and look at potentially selecting funds that meet your criteria. Now, I also like to look at currency. So I prefer, a US dollar exposure for currency, because things such as commodities such as gold and oil are typically priced in US dollars, and I much prefer exposure to currency like that rather than having exposure to the likes of euros, maybe. You can also filter here by total expense ratio, so you can see some of those smallest ones. And as I mentioned earlier, if you scroll down, you can see here you've got very interesting funds such as this one, iShares electric vehicles and driving technologies UCITS ETF. You can see here, although it's quite expensive, has returned over 51% in the last 1 year. Okay, so what we want to do now is take a dive into one of these funds, and then what I want us to do then is compare a couple of them just to see what differences are. All right, so I just want to take a look at this fund here, iShares Dow Jones Global Sustainability Screened Fund. Now, it's quite an expensive fund at 0.6%, but it's a large fund. Let's just take a quick dive into that just to see what that is trying to screen out for. You can see here, it says the investment strategy is the Dow Jones Sustainability World Enlarged Index, excludes alcohol, tobacco, gambling, armaments, firearms, adult entertainment. Index tracks 20% of the largest 2,500 global sustainability companies on the Dow Jones Global Total Stock Market Index. Okay, a fun thing to do is to look at the fact sheet, which if you click on it, just then will open up here. Again, and then you can just expand. And again, that tells you things such as what it's trying to screen out for, gives you information on things such as the ISIN. So you can go and find this particular fund if you want to invest in it. It tells you what the total expense ratio is, which is quite expensive, and then gives you information on what sort of performance this fund has had over time. Key things to look at is the top holdings in this fund. You can see that it's got some interesting companies in here which meet the requirements of screening out those particular areas such as firearms and things. You've got here companies that remain as top holdings: Microsoft, Nvidia Corp, the likes of Visa, Nestle, and things like that, that are within this particular fund. Okay, so I'm just showing you that. Then you can scroll down, of course, and look at the sector breakdown, as well as you can look at geographical breakdown. You can see here a good almost 50% allocation to the United States. Again, gives you the dealing information. So if you did want to invest in this particular fund, you've got the information here, such as the ticker. Of course, it's on the London Stock Exchange and stuff like that. You can easily find this particular fund if it's something you wanted to invest in. Also, coming down here, I wanted to show you guys, you can click to show more information. I like this because it gives you an idea of certain things, such as the fund size. He's giving here an amber rating, saying that this is a fairly decent size. the larger the better, really. Again, showing us physical full replication, because this is a tracker, it's an ETF. In volatility, we can see here volatility of 13.35%, which is fairly high, but again, it's quite okay for me within my risk tolerance if I was going to invest in this particular fund. We can see here the price here shown as 43, and we can see here that for this particular fund, this is showing as a 52-week high, which shows us this particular fund has quite a fair bit of momentum behind it, which is a good thing. So, if you're going to look at this, I'd say come in here and look at, all these various details, such as the fund structure. It says here's an OIC. You can see here the fund manager, fund provider is iShares, for example. Definitely take a look at the key investor information document, which is the KID, and you can look at other bits of information in these areas as well. Just clicking back and coming back here, what I'd love for us now to do is to try and compare a fund like that I chose here. This is quite an expensive fund, but just picking that as an example, and then we're going to compare it to something else, maybe on this page, that looks to offer a similar thing. So I'm going to look at this particular fund here, UBS ETF, MSCI World Socially Responsible UCITS ETF. Again, this is quite a large fund, much cheaper than the other one at 0.22%. So what I do is I put this tick here, and then come down here where it says compare selection. You can see it's got two of them to compare. If I hit here, compare selection in detail, let's take a look at what that looks like. That brings us to this page here where it shows us various bits of information for the two funds. To make it super easy, click here where it shows show only differences. Click on that. That simplifies the view even more for us, so we can spot the key differences. You can see the fund sizes are materially different. You can see this particular fund is accumulating while the other one is distributing. And of course, if you are receiving that dividend, you need to reinvest it, for that to compound for you. But the key thing to note, though, is that this particular iShares fund is actually way more expensive than the UBS one. And we can see what impact that might have by way of looking at the performance. You can see that looking at over the last 1 year, the iShares fund is returning 19.95% compared to 21.96% by the UBS fund, which again, that fee of 0.22% would have played a key role in that, because the lower your fees, the more likely you have more of your money at work for you. Again, we look over the last 5 years, you can see this particular fund again at 0.6%, returning 82.99% compared to 92.26% for this UBS fund here. Again, potentially driven by those fees being lower. But again, remember, the sort of performances we're seeing for these two funds, which are socially responsibly focused, is pretty impressive when you think about it, given, that these particular funds have had to screen out for some of the things that we might ordinarily have in our portfolios, which might ordinarily in different ways boost our portfolios. Again, I'd like to come into this particular tab just to look at how the chart changes over time. I can click here just to change the colors a little bit to make it quite obvious. And you can see there that the blue, which is the UBS, you can see there is over time outperformed quite significantly. But if you click over the last 5 years, let's look at that. Again, you can see that UBS fund started off quite below the iShares one, but over time has just gradually outperformed this particular fund. And again, this is likely driven by the lower fees that particular fund has. Now, what I've done is I've come and downloaded a UBS fact sheet for us to look at as well. Make sure we are, looking into the detail and doing the research properly. You can see this as it's a passive tracker. It tells us here that the fund is passively managed, and it gives us all various bits of information for us to look at into a bit more detail. Then it tells us here that this index is designed to measure global equity market performance, considering only companies with high environmental, social, and governance ratings relative to their sector peers to ensure the inclusion of the best-in-class companies from an ESG perspective. Okay, so you can see I've gone to some length to tell us what sort of companies this particular fund is invested in. So if we go into a bit more detail and zoom in, you can see about 60% of our money will be invested in the United States. Again, you look at the sector's exposure, and the usual suspects that we might expect from a typical fund are excluded here, such that we don't have certain companies here. If you look at the top 10 holdings, you can see that we've got the likes of Coca-Cola, Cisco Systems, Home Depot, Disney, Microsoft, and even Tesla has made it onto this list. But you can see this list is quite a diverse list compared to what we might ordinarily see as our top 10 position for companies if we invested, say, in the S&P 500 without any of these sort of screenings, for example. What I've done is to make this even more fun, I've gone onto a website. Again, I'll put this in the links for you guys to check out. This website is called trustnet.com, where it allows you to create these fun charts, basically. Find the funds that you might want to invest in and just look at how the performance has changed over time compared to some of the funds that we might ordinarily invest our money into. So I've put in there the index, the S&P 500 index, just kind of see what the performance of these more socially responsible investing funds, how they compare to if you invested your money, say, at Vanguard with the S&P 500, or looking at the S&P 500 index itself. And so what I've done is included those two funds that we were looking at and comparing earlier, just to see how they've performed over the last 12 months compared to over the last 5 years as well. Obviously, remember, past performance or past outperformance doesn't inform future performance, but it's actually quite interesting to look at to see how these funds have performed as time has passed. So the thing to notice over the last 1 year, you can see that the S&P 500 did not necessarily completely outperform these funds. S&P 500, according to this, returned 26.4%. Again, the Vanguard S&P 500 ETF fund, again, tracking that S&P 500 index at 25.7%. Again, quite closely tracking it. You can see that our two funds that we picked as just examples for this particular illustration are not too far behind at 22.5% and 22.8% respectively. Okay, looking over the last 5 years, the S&P 500, according to this, returned 92.2%. Again, if we look at our two funds, the iShares Dow Jones fund, even with the higher fees that it had, has returned 84.5% over the last 5 years, which is really, really interesting, because when you think about it, by investing in these funds, what we're really saying here is that the person who's invested with a tilt towards social responsible investing and with a focus on sustainability has had the best of both worlds in a way, because they've had their returns, they've had quite decent returns for the last 5 years. But at the same time, I guess for their heart, they feel that they're voting with their money, and their money is being used in a way to support companies that are having a positive impact on our societies and in the world more generally. Okay. Now, I'm going to put links to these websites below for you guys to check out. The thing to mention with this particular website here is that you can use this website to actually, beyond just screening for ETFs, ethical investments that you might want to invest in, or any ETFs for that matter, you can actually add these various particular funds that you're researching to your watch list. Okay, so you can keep an eye on them, just kind of see how they're performing over time. The other thing as well is you can create a bit of a dummy or practice portfolio on this website. Again, you can open an account if you want. This is by far, I don't know who owns this website, by the way. I'm not recommending it as a recommendation. I'm just saying this is a tool that you can explore and use yourself, because it's one that I explore myself as well. So you can add the particular things that you're researching into your dummy portfolio. This is not a real portfolio, it's a dummy portfolio, by clicking on these various things and tracking them, just to kind of see how they perform over time. So a combination of this website and this one here at trustnet.com should really help you really take that deep approach when it comes to making your ethical investments, really researching them and being very clear that the funds you're investing in meet your needs, meet the values that you are prioritizing on this journey towards ethical investing. Guys, now that I've finished doing that demo, I'd love to hear from you guys in the comments. Do you think it's important to invest your money ethically? I'd love to actually know what you think about that. And if so, would you be considering committing an element of your money, perhaps on a monthly basis, towards investing in more ethical funds? Let me know in the comments below. To support what I've shared on this video today, I'm going to be sharing with you guys a link to a super detailed blog post that I created on this very topic as well. I'm going to put that in the links below and above for you to head over and take a deeper dive into more things you might want to consider on this journey towards getting started with ethical investing. Thank you so much for watching today's video, guys. Don't forget to hit the like button and subscribe to our channel if you really enjoyed today's video. Thanks again, guys, and I look forward to seeing you on our next video. As ever, in all things, be thankful and seek joy. Take care, guys. Bye for now.